Okay, so please come back. Finally, we've done most of issues. First issue, when you buy the PPE, right? So when you buy the PPE in the first day, you have to understand what's the cost. After you got your PPE, when you start to use it, then you have to understand how to do depreciations. When we have additional payments, that additional payments is our expense or assets. Okay? Then finally, after 5 years, after your useful life, when you don't want to use your PP, then what could we do? You can dispose it, 处分. So right now we talk about the last day. You can dispose your PPE. 处分. When you don't need it. Okay, so right now we go to the last day finally. So think about it. Dispose your PPE, 处分 PPE. What can you do when you don't need your PPE? When you don't need your laptop? When you don't need your cell phone? What can you do? Throw it away? Sell it? Give it to someone else? Give it to your mom, your dad? Say, oh, I don't want the cell phone because it sucks, so you can use it now. Okay? So last day, when you don't need your PPE, then what can you do? You can throw it away, right? Because it's old enough, like my iPhone. Before my iPhone 8, I use it like 8 years already. So don't want my iPhone. So that's why useless, I throw away. Or you can sell it, try to get some money back, right? Or you can exchange it. So what does it mean? You need the cell phone, I need the iPad, okay? So we can change. I give you my cell phone, you give me my iPad, okay? So you can exchange your assets, PPE, to get another PPE back, okay? So no matter which way you are going to use, depends on your PPE situation, right? But what can you get? When you throw it away, what can you get? When you sell it, what can you get? When you exchange your PPE, what can you get? What can you get? Throw it away. You got nothing, right? So when you sell it, you got what? Some money back, right? So we call proceeds. When you exchange it, so you got another asset back, okay? So I know depends on how you dispose your PP, you will get different kind of things back. Nothing, money, another assets. But for their transactions, especially your company, everything they need to know whether that kind of things can bring your company profit or not, right? So when you throw it away, when you sell it, when you exchange it, do you have any profit? Do you? Is it a gain or loss for your company? Gain or loss for your company? What do you think? I decide throw away or sell my cell phone. Okay, I sell my cell phone and got some money back. So is my gain or my loss? Your gain? How could you make sure it's your gain? If I told you my cell phone right now, the value, after I use my accounting methods, depreciation methods, 折旧法, I find out my cell phone's book value right now at this moment is $200. I sell it, I got $10 back. It's a gain or loss. Its value right now is $200. So it means what? My cell phone's value right now is $200. I sell it to get $10 back, only $10. So it means what? It's $200. I sell it, I get $10 back. So it's my gain or loss. It's my loss, right? Why? Because I sold my assets with a low price. So of course it's my loss, right? If I told you my cell phone right now, my iPhone, right now book value is $200, okay? Then I sell it to get, so the selling price is $10. It's a gain or loss? It's a loss, right? Because $200 I sell to get $10 back. So I lost how much? $190, right? So it's my loss. $190, right? I sold my assets with a low price. So of course, this is my loss. How about another case? I sell it with the price $250. So it's my gain or loss? Of course, my gain, right? I sold my assets with the higher price. So this is my gain. How much? $50. Okay? So for companies, for yourself, the same. You have to understand everything for your business, that's your gain or loss. In order to understand that's your gain or loss, you need to understand what's your PP's book value right now, right? Also, you have to know the selling price. Selling price means what? When I sell it to the market, how much money I can get from the market, right? So selling price actually we mean market value. What's the value in the market? How much money you can get from the market? So that's your market value. .市场价值 Okay? The money I can get, the value I can get from the market is $10, $250. Okay? So only you understand your PP's value right now and the market value. Compare these two numbers that you can understand the business for your company, for yourself, is gain or loss. Okay, any questions? No problem? Okay. So before we know this our gain or loss, you have to understand your book value, your market value. But don't worry, market value, we will give you the numbers because it's quite hard to get a number. When you really do the business, you will get the market value. Okay, so let's see the whole process. To understand the business is your gain or loss. So the problem, the question is, do you know the book value? $200. Do you know the book value? How to get the book value? $200. PP's value in your accounting books. How to get the number? Book value? Remember? You use 3 different depreciation methods, right? Maybe you use straight line method, 直线法, Union activity method, 活动量法, declining balance method, 余额递减法, then you will get the book value. When? Which day's book value? After I use accounting methods, depreciation methods, I can get the book value at which date? Remember that? Usually when we do the depreciation, the end of each period, right? So when you open your accounting books, you find out your PP's book value at which date? At the end of each period, right? But can you tell me, you decide to sell your PP always at the end of each period? Of course not, right? So the problem is, so far you only know your PP's book value at the end of each period, okay? But when we sell it, it's not on the last day, okay? So the first problem is, you only know your PP's book value on the last day because we only do depreciation at the end of each period. 期末提折旧, remember that? Since we only do depreciation at the end of each period, so we only know the book value on December 31st. But what's the problem? The problem is we are going to dispose our PP, sell our PP, is not on last day, okay? So if your disposal date is right here, maybe April 1st. Maybe April 1st. So what's the problem? I only know the book value at December 31st. You know the book value at December 31st. Do you know your book value on April 1st next year? You don't know that. Okay? You don't know that. Because usually we don't do depreciation on April 1st, right? So what should we do? Try to find out your book value on April 1st, right? How to find out your book value on April 1st? Do your depreciation, right? Because during this period from December 31st to April 1st, you use your PP 3 months already, right? Since you use your PP 3 months already means what? The value decrease 3 months more, okay? So first step, always, don't forget, you have to do what? You have to do depreciation. You used PP 3 months already. So means what? Value should be decreased 3 months. Okay? So first step, always do your depreciation in order to get your PPE at the disposal date. So step 1, do your depreciation. Depreciation. Okay? To get your PPE book value at disposal date.提折旧已取得处分日的账面价值。OK， So time is very important. When they happened at different times, you cannot compare directly, okay? So first step, do your depreciation. Try to find out your PP's book value at disposal date, okay? Then finally, we got our book value, the first number. Then can you compare your book value with market value right now? Yes, right? Because after we do the depreciation, we find out our PP's book value right now, finally. Okay? So when we find out our PP's book value, you can compare with the market value. Okay? Then find out is your gain or your loss. So step 2, you can find out this your gain or your loss. My loss, why? Because you sell your PP with a low price. Of course, that's your loss. Your gain, why? Because you sell your PP with a higher price. So that's your gain. Okay, any questions? So don't forget step 1. Always time is very important. Any questions? Okay. Then, so here, remember, first step, always, don't forget, do your depreciation. So, what's the journal entry we use? Debit, depreciation expense. Credit, accumulated depreciation, right? So, debit, depreciation expense. Credit, accumulated depreciation. But, so for this step, is only what? Be careful about the time. Okay? The time is very important. So here, how many times? Depends on how long you use your PPE, right? Then you can get the book value at disposal date. After that, you can use the number book value at the disposal date, compare it with the market value, right? So when we compare the book value at the disposal date with the market value, compare these two numbers, then you can find out this is your gain or your loss. Okay? No problem, right? After you got the numbers, don't forget accounting always we have to do what? Record the transactions on accounting books, right? So finally, after you find out that's your gain or your loss, we have to record the transactions on our accounting books. Okay? So after step 1, step 2, then what's the next? Journal entries. So when we want to record the transactions using journal entries, don't forget what's our effect. First, we sell our PP, right? So your PP should be decreased from your accounting books. So we say write-off 冲销. Remember, write-off 冲销 is like what? We mentioned write-off 冲销 in chapter 8, right? So when your accounts receivables, we really cannot get back. That's our actual loss. We find out our actual loss, then what should we do? Write off our accounts receivables. Means what? Throw away, make it disappear from our accounting books, right? So since our PP, we sell it to customers, we sell it to someone else. So PP is not yours, right? So since the PPE here, book value is not yours. Okay, so we have to write off 冲销 means what? Make your PP disappear from your accounting books. So your PP should be decreased. Not on your accounting books anymore. Okay? So we make our PP decrease. Should not be on your accounting books anymore. Okay? Can you tell me which number? Even though I know, okay, for example, I use this way, decrease, so it should be credit, right? So for example, PP decrease on credit side, how much? Is book value or market value? Book value or market value? Book value, right? Your PP's value on your accounting books. So you think your PP's value using accounting way. So right now on your accounting books, say how much it is. So you make it disappear from accounting. That means what? It's book value, right? So it's not market value. So your PP's value decrease should be book value. Here should be book value. Because there's a number on your accounting books. When you look at your financial statements, there's a numbers on your financial statements, right? And we make it disappear. So of course, including accounts, including related numbers, okay? So your PP disappear, decrease, then what's the second effect? We sell it, so we got the cash, right? Or we exchange it, we got another assets. So you got cash, you got another assets. So you had to tell them, you got the cash or another assets, right? So your cash or another asset should be increased, right? Because you got it from the market. So can you tell me what's the number we have? For example, you got the cash. So cash on debit side, right? You got the cash. Cash on debit side. How much it is? Market value or book value? Of course, market value, right? Because you got cash from where? From the market. So of course, you got the cash from the market. Means what? This is the value they are willing to give it, right? So of course, that's the market value. You got the cash. You got another assets from the market. Okay, so here should be market value. My PP decrease. My cash increase. My PP decrease from your book. Your cash increase from the market. So PP decrease from your book. Disappears from your book. Okay, so based on compare market value and book value, you know the difference is your gain or loss, right? So also we have to recognize, recall the transaction is our gain or loss. 认列损益，认列赚或赔。Okay, any questions? So don't forget, first effect, your PP decrease. Second effect, you got the cash. Third effect, that's your gain or loss. So this transaction is your gain or loss. Okay, any questions? Okay, so if you understand the concept right here, then let's look at the case. Let's look at the case here. On your slide 123, your slide 123. This one is more better case than before. So we go to this one directly on your slide 123. So what happened? July 1st, 2025. This is the date you sold your office furnitures. So this is your disposal date. 处分日. Okay, so how much money you got? 60,000 cash. So that's the market value. The selling price is the market value. Okay. And for this PP, your office furniture, they told you the cost $60,000. And accumulated depreciation, how much? $41,000 on which day? January 1st, 2025. Okay. So based on the cost, based on accumulated depreciation, based on the date, they told you the book value on which day? January 1st, 2025. They told you the book value is $19,000, right? Because cost minus accumulated depreciation on this date. You got book value on this date, okay? It's better not use cost, use equipment. $16,000 is the cost. Okay? So I only know the book value at the end of each period. So you only know the book value on January 1st, December 31st. That's it. But the problem is our disposal day is July 1st, right? So on July 1st, I know the market value is $16,000. So selling price is my market value, $16,000. Can we compare these two numbers directly? The book value $19,000, the market value $16,000. Can we compare these two numbers directly? Of course not. Why? Because they are on different dates. Okay, so what should we do? First step, you have to do depreciation. So we do the depreciation to get the book value on this at the disposal date. So you have to do the depreciation to get the book value at disposal date, July 1st, 2025. Okay? So don't forget, you use your PPE 6 months already. In this case, we assume because we didn't get enough information, so we assume $8,000. Usually $8,000, you have to do your math. But here, we assume, we give it a number directly. So we assume is $8,000 for 6 months. We assume that, but usually you have to do it by yourself. Okay, so after step 1 depreciation, you find out the book value, how much it is. So can you know what's the book value? The book value should be based on book value $19,000. The value decrease 8,000 more, right? So you know the book value should be $19,000 minus 8,000 more. So it should be $11,000. Okay? So I know the book value $11,000. Based on this, can you tell me is it your gain or loss for this transaction? Is your gain, right? Why? Because book value $11,000, you sell it with a higher price, right? So it's your gain $5,000. So after that, I know that's my gain $5,000. Compare $11,000 with market value. I know that's my gain $5,000. Okay, so that's our step 2. Any questions? After depreciations, I know my book value $11,000. Compare with market value, I know this my gain $5,000. No problem? If we understand the process right here, we just use journal entry to record the whole process. So we use journal entry to record the whole process right here. Okay, so don't forget, step 1, write down the journal entry. Debit, depreciation expense. Credit, accumulated depreciation. How much? $8,000. Okay? No problem? Okay, if you don't have any questions. So step 1, debit, depreciation expense, $8,000. Credit, accumulated depreciation, $8,000. Okay? So that's how we do the depreciation. Okay? After that, what's your PP's value on your accounting book? Right here, right? After you write down the first journal entry to record your depreciation. So this is your journal entry to record depreciation. After that, you have to understand your PP, when you open your accounting books, your PP look like this, right? How? Again, here should be equipment is better. On first day, January 1st, you have a cost $60,000. You have accumulated depreciation $41,000. You have a book value $19,000, right? Then after we do the depreciation, means what? Means your accumulated depreciation increase $8,000 more, right? So that's why you got $49,000. Your depreciation expense, your accumulated depreciation increase $8,000 more, right? So what's your accumulated depreciation? From $41,000 to $49,000. Okay? So it should be $41,000 increase $8,000 depreciation expense. After that, we got the book value, $11,000. So when you look at your accounting book, should like this way, okay? No problem? Okay, then what's our next? Since we know this is our game, right? Then we try to use journal entry to record the situation. So what's the journal entry we should use? Go back to the slide on here, slide 116. First one, we have to make our PP disappear from our accounting books, right? So we write off. How to make it disappear from your accounting books? You want to make it disappear from your accounting books. Go to your slide 129. Go to your slide 129. After depreciation, we know our book value. And compared to your market value, we know that's our gain $5,000, right? And right now, we are going to record the whole transactions. First is what? Make your book value, your PP disappear from your accounting books, right? How to make it disappear from your accounting books? It looks like this way, right? Remember, it's on your slide. Here, 125. On your slide 125, after you do the depreciation, your PP cost $60,000, accumulated depreciation $49,000, book value $11,000. And since we sell it to others, so you have to make it disappear from your accounting books. Why? Because it's not yours anymore, right? Since that's not your assets, not yours, so they cannot appear on your accounting book. They cannot. So how to make it disappear? Accounting, quite easy, huh? Put it on the opposite side, then it disappear, right? So how to make your PP disappear from your accounting books? Want to make it disappear from your accounting books. So write off, 冲销, make it disappear. So how? Put down the opposite side. So make it disappear, then you should put it on the opposite side. So put it on the opposite side. 分录放反方向 reverse your journal entry. Okay? So that's how we make it disappear from your accounting books. Reverse your journal entry. So, for example, appear, disappear. Remember, equipment, you got the equipment, so equipment on debit side, right? Accumulated depreciation should be on credit side, right? Okay, so how to make it disappear? The opposite side. So the opposite side means what? Debit, accumulated depreciation. Credit, equipment. Okay? So increase become decrease. Accounting, debit, credit means plus minus, right? So how to make it disappear? Opposite side, then it will plus minus, they cancel each other, then it's gone. Okay, no problem. Okay, so let's see how to make it disappear. Equipment cost $60,000, accumulation depreciation $49,000. Okay. If no questions so far, so let's summarize all the process. Don't forget, what's our step one? On your slide, page 122. Step one, we do the depreciation to make your book value become July 1st, right? Okay, so do your depreciation. So let's write right here on your page 130. We do the depreciation. Debit, depreciation expense. Credit, accumulated depreciation, $8,000. So that's our step one. Okay? Make your book value become $11,000 at disposal date. Okay, so after step 1, finally we get the book value at the disposal date. Then what's the step 2? We sell our PP, right? So since we sell our PP, then don't forget, our PP we write off, 冲销, make it disappear from your accounting books, right? So first effect is what? First effect, your PP should be decreased, disappear from your accounting books. So equipment is this is your cost. Minus $4,900. So you got, that's your book value. $11,000, okay? So put your PP on the opposite side, then it disappears from your accounting books. Okay, so first effect, that's not my PP anymore. So what's the second effect? We got the cash, right? So cash increased how much? $16,000. So second effect, you got the cash. How much? $16,000. That's our market value. Okay, so second effect, you got the cash. Compare your book value with the market value. I know that's my game, right? So game is like a revenue. Revenue is on credit side. So your third effect is what? Third effect is you got a gain. So it's like similar, quite similar to revenue. Because what? Both of them will make increase your net income, your profit. So they should put on the same side, the credit side. So gain is like a revenue. Both of them will increase your net income. So we put it on credit side. Okay, so there's a third effect we have when we compare book value with the market value. You know this you gain $5,000. Okay, any questions? So step 1, do your depreciations. Step 2, you sell your PP, so you have to recognize all the effects you have. No problem, take a break.